Assalamualaikum warahmatullahi wabarakatuh, and good morning, class. Before I start the class today, I want you all, please be in class on time, because I don't like students come late to the class. Okay? Please bear in mind. Okay. According to the schedule, this week we are going to learn on accounting for receivable, right? But unfortunately, for today's session, I'll make it short because it takes about 10 to 15 minutes because I have a seminar to attend. I will be the presenter for the seminar. Okay, and for the session, I'll focus on accounting for bad debt, a portion of accounting for receivable. So basically, what we are going to cover for today is, first, we want to know the concept of bad debt. What is actually bad debt? And secondly, we are going to discuss on how we are going to treat the bad debt. Thirdly, how we are going to handle a bad debt when it is recovered later, or we call it bad debt recovered. And lastly, I want to test on your understanding. So please pay your attention because this topic is not very difficult. It's quite straightforward and easy to understand. Okay, let's move on the concept of bad debt. Actually, when we talk about bad debt, it is associated with credit sales, right? Credit sales. Nowadays, trend in business, a large proportion of sales is made up of credit sales. For example, we can see a lot of business promoting a variety of schemes to trade their goods on credit basis. We can see, for example, court memos with the promotion of you pay only 1 ringgit and then you can bring back sofa. You pay 1 ringgit and then you can bring back toaster or DVD player or fridge. And you can see also HSL and Electric in collaboration with credit card provider with zero interest installment promotion, and many more examples of businesses doing their transaction on credit basis. But when the business doing the transaction on credit basis, it actually exposing them to a risk. What risk do I mean here? The risk that the customer will never pay back the amount due to them. For example, I'm the owner of business. Okay, I sell my goods to Abu. I sell sofa to Ali. I sell toaster to Ramasamy. But how could I know? At the end of the period, they could pay back the debt they owe to me, the amount due to them. Okay, so maybe for any reason, maybe at the end of the period, Abu declared bankrupt, so not able to pay back the amount due to him. So the amount due to Abu will be considered as bad debt. So for another example, maybe Ali, at the end of the period, I cannot I cannot locate where he or where he is. I cannot identify where he is. So it's actually costly for me to find him. So I consider the amount due to him as bad debt. So actually it is a normal risk to a business when they are doing their business on credit basis. When the owner of the business do the business on credit, meaning that they are ready to accept the risk that the debt will never be paid out. So when the bad debt occurs, we will treat the bad debt as a normal business expenses, and we take it into account when we calculate the profit and loss at the end of the period. Okay, so far any question? Do you understand what does it mean by bad debt? You understand? Okay, good. Okay, let's move on to the second part of the bad debt, accounting treatment. Okay, if you do your business, if you use cash basis, it's quite easy for you to handle the bad debt. But if you use accrual basis in your accounting policy, it's quite difficult, it's quite complex to treat the bad debt. What I mean here by cash basis and accrual basis, do anybody here know what does it mean by cash basis and accrual basis? Aida, do you know what does it mean? Yeah. Accrual basis. Any other accurate answers? No, actually, okay, cash basis means that we recognize income when we receive the payment. Accrual basis is we recognize an income when the transaction occurs, although the payment is not made yet. So, if most of the business today use the accrual basis in their accounting policy. So when the bad debt occurs, we got to adjust. We got to make an adjusting entries to take into account the bad debt. Okay, first. Okay, when the bad debt occurs, it is worthless to record the debt in our account. So we need to reduce it. As your additional information, you can see in NASB 1 presentation of financial statement in paragraph 57, it stated that an asset should be classified as a current asset when it's expected to be realized. So when the debt, we confirm that the debt cannot be collected, or it is considered bad debt as bad. So we need to reduce it. How we are going to reduce it? Okay, how we are going to reduce it? We need to, for an asset account, what is the entry? We debit it, right? The balance brought down, we debit it. So to reduce it, we need to credit the asset account, and then we increase the expense account. We need to debiting the bad debt expense, right? You understand? It's quite difficult. Okay, better for me to write down. Okay, when the bad debt occurs, we debit the we debit the bad debt account, meaning that increase the expenses, and we credit the asset account to reduce it, right? Let's say Okay, for example, let's say Abu is our regular customer. Okay, at the beginning of the year, he bought a sofa from us. The value is 750, and at the end of the period, he is insolvent, and we are confirmed that the amount due to him cannot be collected. So we need to adjust the account. So the account will be and we need to adjust, we need to reduce the Ali's account here by crediting it by the same amount. And then we increase the expense account. We open bad debt expense by debiting it here. And we post the amount here to profit and loss. Just simple, right? Any problem so far? Not at all. Okay. Let's test on your understanding. Okay, let's say Ahmad, at the beginning of the period, the amount due from him is 700, and in June we pay 250, and at the end of the period he is declared bankrupt. And consider the amount outstanding from the account as bad debt. How are we going to treat this? Mariza, what's the accounting entry? Huh? No idea. Meaning that you don't understand from the beginning, huh?
I understand,
Okay. First, we need to reduce the Ahmad account by the amount paid. Okay. We open Ahmad account. At the beginning, balance brought down is 700, and then we need to reduce Ahmad account by the amount paid by him by 250. So at the end of the period, he is declared bankrupt. So we need to set off all the amount outstanding. What is the amount balance? 450. So the amount outstanding, where we should record it, bad debt account. So we need to open bad debt account. Debit or credit? Debit. Okay, and we need to post this to where? PNL. Okay, that's the counting entries for bad debt. Okay, let's move on to the third part, which is bad debt recovered. So, it is common that bad debt we have declared bankrupt before the customer that that has been declared bankrupt, and the amount due to him we consider as bad debt comes to us and pay the amount due. So in that case, what we are going to do? First, we need to reinstate back the amount that has been set off. What's the account involved? We need to, just now we credit the asset account, right? When we declare certain amount as a bad debt, we reduce it by crediting the asset account. So when we reinstate back the amount, we need to debit back the debtors account. And we credit the bad debt recovered. Account. And secondly, when the payment is made, we need to debit bank of cash. And we credit the debtors account. This is the accounting entry involved when the bad debt recovered. Okay, for example, let's say that Abu before this declared bankrupt, and the amount due to him is 500. And later Abu turn up and pay the amount owe to us, the 500. Okay. Let's say this later in he paid the amount. Okay. What's the accounting entry? First, we need to reinstate back. We need to debit Abu with what amount? 500. And then we credit that is our by 500. And then second, when the payment is done, we need to debit bank or cash 500 and credit the debtor. Here is Abu by 500. Why do we need to reinstate back the Abu's account? Any idea? Cuba. Why do we need to reinstate back the Abu's account?
Now we receive payment from Abu.
Yeah.
So now the Abu so when the Abu pays, right?
Okay, I help you. Okay, because I'm running out of time. Okay. Because why do we need to reinstate back the account? Because it is as a historical detail of Abu for us to keep for granting credit in the future. That's why we reinstate back. That's one reason, the main reason. And another reason because we have already first we have already when we declared bankrupt, we already reduced the asset, so we need to take it back when he wants to pay us. Understand? Do you understand? Cannot. Okay, when Abu is declared bankrupt, we need to reduce the amount due to him. We need to reduce the asset account, right? So we credit it. We credit the account. So when Abu suddenly and see us and pay the amount owed to us, 500, we need to reinstate it back. So, do you have any question, Aida? No. Okay. If you cannot understand this, you can read on your own the note that I give to you.